This is the first in the series to help you do the balance day adjustments required for Level 2 Accounting NCEA. We're looking at the trial balance that I prepared for a business called Ron's Recyclers. The balance day is at the 31st of March 2017. One thing I would suggest as you go in, the first thing you need to be able to go in and write on your copy of the trial balance in the exam booklet that you'll have is the debits are on this side, so make sure you head up that that's the debits and those are credits. If you don't know that by now, then you're going to have to just learn that, and there are several ways. Have a look on the internet to see if you can remember debit. These items are debit by nature, these items are credits. So remember it goes to stand that if you want to increase these items even further, you debit, you add some more debits to them. If you want to increase these items further, you add more credits to them, and vice versa. If you want to reduce items this side, you debit against them. If you want to reduce items this side, you credit against them. Okay, let's go. Remember also when you're looking at adjusting, doing balance day adjustments, if you're adding information into the trial balance information, if you're adding, you have to add something both sides. And it has to be the equal amount to keep your trial balance balanced. Also, therefore, if you are changing data on one side to decrease it to become the right amount for that accounting period, then all you do is reclassify it to something else on the same side. So adding information, both sides have to be adjusted. If you're decreasing these amounts, then the adjustment has to be coming out of a figure and be reclassified on the same side. The first one we're going to give you now is interest on the outstanding loan. As you can see in this example, there is a $30,000 loan at 3% per annum. So if you look over this side, the interest figure is sitting at $700. It should be, for this year, 3% of $30,000, which, if we just go on to the next slide, should be $900. Remember, it was sitting there at $700, so that $700 isn't correct and has got to be increased or added to by $200 to get it to be the correct figure, so I can use that in my accounts. The $200 is the adjustment required, and so when you go and have a look at your trial balance, you are going to have to add $200 onto that interest account on that side. And remember, it's an adding, so I've got to have a $200 that side. It's an expense we've added to, so I'm going to call it an accrued expense. And on this side here, I have to open up an account, and it just basically means as at the end of the year I owed $200 worth of interest, so it will be a current liability if I have to further classify it later on. That being the case, let's go. They might ask you to do a general journal then to explain why you've had to adjust those figures. Let's go and have a look at what a journal means. That's just me putting through the adjustment there. See, that 700 will now be added to by 200, 900. Here's the rule. If you add something that side, you've got to add the same amount that side. $200 goes into that accrued expense account. Here is the journal. A journal is what changes you have made to the accounts listed to put through the adjustment amount. Basically, you're rewriting the adjustment made to the trial balance figures, but you're just doing it neatly. So you had on your trial balance, I don't know if you can remember that there, debit items this side, credit items were listed that side. You added the 200 in on that side, and you added a 200 in on that side. They just want you, a journal just says, please, can you just rewrite that neatly? So here is the journal template that you'll be given below. If you want to make it a little bit easier, this is how I would do an exam. I'm just going to switch screens. Here's my trial balance that you have in your exam sheet. I would take in a highlighter. That's right, the T there. This is what you're going to use to follow it through. Therefore, remember, we've adjusted those figures, so you had to add 200 there, and you had to add 200 into what we would have called an accrued expense account. Okay. In your exam, you will be given then a template. And if they ask you to write the journal for that adjustment you've just made, that's the sort of template they will give you. Do yourself the quick and easy guide. That's 2 entries, 1 each side, so that represents the same T as you've written on the top there. Okay, and remember, so those are the same things, debit, credit, and you can write those in, you won't be given them in the exam. So you're just rewriting these neatly. You've just put 200 that side, so are 200 that side. You've just added $200 in that side, $200 in that side. And all these particulars ask you to do is they say, right, okay, can you tell me what accounts you added that amount to? Well, on this side, I added $200 to the interest account. So write that in there. And on this side, I added $200 to the accrued expense account. It's a balance day adjustment. Have a look there. There's the date. So that's the date I'm making these adjustments for. So 31st of March 2017. And that would be your journal as per the exam requirements. So let's just go back then and look at how it's written up neatly there. And so there we go. You see I've got the 200 coming down to there. And I've got the 200 coming down on that side there. And now we know we've got those debits and credits round the right way. The other question they do ask you to do is a general ledger account. And here we go. A general ledger account is a separate thing altogether. And basically a general ledger just says, can you tell me the story of what's gone in under that account name? So for when we do that in school, we say, can you tell us the story of what's gone on in that box? Or in this case here, it's the interest box. So let's go and have a look there. What I have done is I have originally started with 700. I've now put an adjustment through and added 200, giving me a new balance on that account of $900. So let's just go down here. It says here's your interest account. It says the balance information I've already been given. Remember, it's on the debit side, so you say they are standing there as debits. I then added another 200 debits, so there it is, brings me now to 900 debits, and a bit later on we'll do that. But remember that all expenses and all income items have to be cleared out at the end of the year, and NCEA exam expects you to be able to know that. That means that that account basically has to be taken down to 0. How do I get rid of 900 debits? I put 900 credits against them and effectively move those debits into an income summary account where I gather together all my income and all my expenses to work out what my profit is. Hopefully that helps, and we'll go on and do some more balance day adjustments using those same rules later on.